All right. Well, welcome to part 2 of the video series I'm going to do on the UHT, the underused housing tax. If you are watching part 2, unfortunately for you, I guess that means that you are falling into one of the two situations where, as a Canadian, you still have to deal with the UHT. And again, just for recap, those situations were one of the two following things. Either one, you own a corporation that owns residential property in it, or two, you own a rental property jointly with somebody else. Thereby, under the UHT Act, you're deemed to be in a partnership and therefore are subject to the UHT returns. Now, it's important to understand you don't have to have gone to the CRA and said we're in business together. You don't have to have the GST number. Just the fact that you jointly own a rental property with at least one other, even if it's your spouse, you are subject to the UHT return requirements. And again, as a recap, if you are, then this has to be filed by April 30th of every year. And you're going to have to do this every year going forward. This first year only, they're making an exception, and you will have till October 31st of 2023. So just this one time only, you have another 28 days to get this return filed. Every other year, your next one, you're going to have to pay by April 30th, you'll have to file another UHT return. So just in about another 6 months. Okay, so now that we got that out of the way, we know you're listening to this video because you or someone you know is one of the two situations where you have to file a UHT return. So now what do? Well, there's a couple of options. The easiest option, based on everything I've been able to sort out and gather and investigate, is to do it digitally. So, and the easiest way to do that is to make sure that you have a My Account login with the CRA portal. So if you just Google CRA My Account, you'll take you to a login portal where you can log in using either a CRA username and password or partnering with your online banking, and then you're into your My Account portal. Once you're into your My Account portal, you're going to click on the section called Tax Returns, and then on the bottom right side of the next screen, you will see a new section called the Underused Housing Tax. Once you click on that link, it will walk you through the process of digitally completing the UHT form. That is going to be my recommendation, because despite what the CRA claims on their own website, they are not able to give any instructions or directions on where you can upload a completed paper copy of a UHT return. I've looked, I've researched, I've called them. They don't even know the answer to their own question. So it's helpful, I think, to print the UHT form just so you can get it all filled out properly and take it with you to make sure you can fill everything out. But the only way that has been provided that so far to actually file it is to recreate all the information you're going to write on the paper form digitally on the CRA portal. So take that for what it is. Maybe they'll come up with another way to upload it like they say you already can, but there isn't, and they have no answer for that. So they're claiming that's a typo. We'll see. So that in mind, again, I would actually, though, still suggest printing this form out, because there's lots of it that's going to be easier to understand in paper, and there's lots of it you can actually skip. So let me walk you through this form. The paper version of this form is 9 pages long, but the good news is 3 of those pages are just instructional and definitions and extra info. You don't actually fill out the last 3 pages. So we're going to consider this to be a 6-page form, even though the full printout is 9 pages. In those 6 pages, there are 9 parts. Those parts are going to become relevant. We're going to refer to different part numbers as we walk through this form so that you can make sure that we're, forgive the pun, but on the same page with what we're doing. So let me walk you through this form for a second. Part 1 is the information about the owner. This is not going to require any significant effort on your part. You should already know all of this information. Things like your name, address, phone number, social insurance number, And then again, probably the same information regarding the contact person. In most cases, you are going to be the contact person and the owner, so your information is going to be filled out here twice in part 1. In some cases, you might be having this prepared by our firm or by your own accountant or by a friend, hopefully not, but maybe. Anyways, if someone else is filling out this form for you or with you, then you would put their name as a contact person. But otherwise, you will beat the information in both sets of part 1. So that's part 1, pretty straightforward. The only thing I'm going to note at the end of part 1 that is a little bit confusing, I feel like the CRA came up with the most confusing, convoluted terminology they could possibly think of for this UHT, and then have gone and tried to explain definitions of which also require definitions. So again, I've tried to do most of the hard work for you, so hopefully you can benefit from the stress I've gone through the last few days and weeks to try and figure this out on your behalf. In part 1, there's a box at the bottom that talks about partnership and trust related questions. This is going to be key here. The first question says, do you own the residential property as a partner of a partnership? Almost all of you that we're going to be filing UHT returns for, and most of you that will probably have to file one if you're relevant, are going to be checking yes to this box. The whole reason you're having to deal with this is because you jointly own a residential rental property with at least one other person. For UHT purposes, that's deemed to be a partnership. You want to check yes in that box. It's box 110 on part 1 of the form. The second half of that, though, asks for a partnership account number. The key there is in brackets, it says if applicable. So only worry about that if you already have a partnership number, and most of you will not. It's not a GST number. That's not the same thing. So most of you can ignore the number part, and you're just going to check yes next to the being a partnership box. If you're filing a UHT return because you got a corporation that owns the property instead of you personally, then you're not going to check that box at all. You're going to check no. But most of you are going to check yes. All right, moving on to part 2, information about your residential property in Canada. So this is going to ask you information about where the property is located. You're going to need to find some documentation as part of filing this UHT return. We're going to come across some pieces of information that you're not likely to know off the top of your head, and you're going to have to go get. The good news is it probably won't be too far to go or too hard to find, but you are going to have to do a little bit of paperwork finding or phone calls to get some of this information. Box 235 on part 2 is no exception. It wants to know the property tax or assessment roll number. So every year you're going to get a property tax assessment notice from the municipality that your property resides in, whether it be a city, town, county, whatever. They want the membership or property tax roll number that'll be listed on that assessment. So you're going to need to go dig up your most recent 2022 property tax assessment notice and put the roll number there. And while you're at it, don't put that away. You're going to need more information off of that property tax assessment in just a moment. It's going to ask you questions in part 2 about what type of property it is. Most of you are going to probably be a detached house, a duplex, or a townhouse, or a condo. But there's 6 options there. You can choose the thing there. What type of ownership do you have? So your options there are sole ownership, which will not be the case because you are by definition owning this with at least one other person. Legally, I don't know which you're going to pick. Your 2 options additionally are joint tenancy or tenants in common. There is a legal distinction between the 2. Most of you will probably be joint tenancy, but you may want to check with your legal paperwork or with a lawyer if you have questions about that. Then it's going to ask you to fill in the owners of the property. If this is just you and your spouse or you and your significant other that own the rental property, this will be pretty easy. You're each going to be 50-50 and you obviously know the names. If this is something where you might jointly own a rental property with 5 or 6 other people, part of like a timeshare or a rental pool or something, this might not be so easy to get. There is a little bit of grace though, because it only requires you to list the owners that have at least 10% ownership in the property. So that'll be helpful for you there. I mentioned a few moments ago not to put that property tax assessment notice away because you're going to need another piece of info from it right here. Box 280 in part 2 wants to know the assessed value of the property. The easiest way to get that is going to be from that same 2022 property tax assessment notice. And this is not asking for the taxes you're asked to pay, it's asking for the value of the property. Please note that distinction. Box 285, just below that, is one other piece of information. If you just recently acquired this home or this residential building, this might be pretty fresh in your mind. It's just going to be whatever you bought the place for. But if this is a place you've owned for 5, 10, 15, 20 plus years, you may have to really scratch your memory or go try and find some paperwork to figure out what it last sold at, because you would have been the buyer. So it's going to want to know what you bought it for 15, 20 years ago. So anyways, so that's part 2. Part 3 you can skip. Part 3 is designed for people who are foreign owners. So they are not permanent residents or Canadian citizens. Most all of you watching this will be permanent residents or Canadian citizens. And so you can just completely X out and skip part 3. And same actually with part 4. Part 5 gets into the concept of qualifying occupancy. Most of you, as far as I can tell after reading through this section, are also be able to skip part 5. So for argument's sake, we're going to say you can skip part 5. In saying that, maybe now's a good time to make a mention of something. Once you are in one of those two camps where you have to file a UHT return, then the next task becomes, we have to file a return, but now we got to try and qualify under one of the exemptions where we don't have to pay the tax. We just have to file the return. And so as part of that, I just want to reemphasize here, and I'm sort of just speaking on behalf of the CRA, hopefully. I don't want to say that they have emotion or that they care, but the catch here is you just have to file this return by the deadline. It doesn't say that you have to file it 100% correct. So if you do your best to complete all the information and you get a slightly wrong value, you can't find the exact price you sold it for, maybe you misspell one of the names of the owners, maybe you miss checking a key box that you didn't realize you need to be checked, I personally believe you're still going to be okay. The penalty attached is for not filing. So as long as you do your best and file by the October 31st deadline this year or by April 30th every year hereafter, I believe you're going to be okay. And if the CRA needs you to give them more information, something got missed, a box wasn't checked, whatever, I believe you'll still have considered filed on time as long as you get to them before the deadline. So some of these numbers are going to seem hard to come up with. Some of the data might seem hard to find. Do your best. That's all I'm going to say is do your best, get it filed before the deadline, and if CRA needs more information, then hopefully they'll ask for it and realize that you were compliant still. Part 6 is the most crucial part of this form. As I mentioned a moment ago, this is where you're going to prove that even though you had to file the UHT return, you are not going to have to pay the UHT tax. So this becomes a little bit of a game where you're trying to find any of these checkboxes, and there's about 10 or 12 here, that you can check off correctly, and therefore you're exempt from paying the UHT tax. You only have to find one of these. Almost all of you are already going to have one. The first box number 620, says you are an owner of the residential property solely in your capacity as one of the following, and one of them is listed as a specified Canadian partnership. Most of you filing this, at least of our client base, are doing so because you jointly own a residential property with at least one other person. Therefore, you're deemed to be in a Canadian partnership for purposes of the UHT return, and therefore you're already exempt from the tax under 620. However, there's actually several other items on this form or on this section that you could also find yourself being exempted from. If you want to just stick it to the CRA or at least feel good, you could try and check off as many of these as you can just to prove a point. Again, you only need to check off one, but if you know you qualify under more than one, it may not hurt to check every single one that you know you qualify for just to make quadruple check, ensure that they realize you're not paying this tax. You're just filing a return. So that first one, Box 620, that's the one that most of you are already going to be able to do. There's a couple others here that are interesting. Box 645, a dwelling unit that is part of a residential property was uninhabitable for at least 120 consecutive days due to renovations. So if you have a rental property, but you had a period of at least 4 months where no one could live in it because you were doing some extensive renovations, for that particular tax year, you would also be exempt from paying the UHT tax under Box 645. Kind of related to that is Box 640, just above it. Residential property was uninhabitable for at least 60 days in the calendar year due to disaster or hazardous conditions. What counts as a hazardous condition or disaster? We've had some very recent painful memories in some cases of this situation, such as the horrible fires that started back in April or May of 2023 in many parts of Alberta. Those would be considered hazardous conditions. People had to evacuate their homes, which included the owners and the tenants. And if you had to be away, if you were ordered to be away from your home for at least 2 months, 60 consecutive days because of those fires, you would also be exempt from the UHT tax under Box 640. So that's another one that some people, hopefully not too many of you watching, but hopefully maybe some of you will also be exempt under. The other ones are probably going to be a little less common, but there are two others that I want to mention. Box 650 says you became an owner of the property in the calendar year, and you were never an owner in the previous 9 years. So if 2022 was the first year you bought this property, you technically are also exempt under Box 650. Or if you ever buy a new rental property in the future, that first year you buy it, as long as you haven't owned the property in the previous 9 years, or in other words, you haven't owned it before, at least that's how I'd interpret that, you would also be exempt from paying the UHT tax under Box 650. So that's interesting to note. And then the final one I want to note is the last box on this section here in Part 6. It's Box 680. In that box, it says, the residential property is located in an eligible area, or you or your partner inhabit this for at least 28 days in the year. So this is actually two parts to this exemption. The first part is the eligible area. Now, what is an eligible area? Well, if you go onto the CRA, their definition of an eligible area just adds, in my opinion, leads to more questions than answers. So let me just explain to you what I believe it means based on what I read. For me, that meant a vacation property that's in a more remote location. So they try to use things like not being in a consensus area. So I'm just going to interpret that as not being in like a city or town. So if the property you own is a cabin 20, 30, 50 kilometers away from any kind of regular civilization out in the middle of nowhere, in my opinion, that would be considered an eligible area and you would be exempt from the UHT tax under this last box. The second part of this is also interesting. The property can be located anywhere as long as you as an owner spent at least 28 days in the year in the property. So let's say you spent every weekend in the summer there, especially some of the long weekends. It may not be that hard to get to 28 days in a year that you resided in that property. And even if you rented out the rest of the year, you are technically exempt from paying the UHT tax under this Box 680 as well. So you get the idea. You just need one of the boxes. I just to cover yourself, just to make sure, I'd check as many of those that you think you qualify for. And we're almost done. Parts 7 and 8 are both short. They're the most terrifying parts because they will have you calculating the tax you owe. But most of you listening to this or watching this video, you can actually just completely cross out and skip Part 7 and Part 8 because you don't actually owe the tax. We just proved in Part 6 that you're exempt based on checking one of those boxes. And if you go to the very top of that section, Part 6, it says, if your ownership is exempt under any of the following, skip sections in 8 and go directly to Part 9. So you're going to be able to skip 7 and 8 and go to directly to part 9. And all part 9 is the signing and dating of it. And then you're done. So that's the UHT form. It has 9 parts. There's about 5 of them that you can skip. Most of you can skip. The most important one is going to be part 6, where you prove that you're exempt from having to pay the UHT tax. Again, you just need to be able to find one of those boxes to check. And we just went through about 6 or 7 that some of you might qualify for. And then, yeah, again, you're going to need finding some information. You're going to need that property tax assessment notice so that you can get your roll number and the value. And then you're just going to need to try and remember what you purchased the house for that section in part 2. That effectively is the UHT return. Now, again, it's important that you get this filed to the CRA before the deadline, which again is either October 31st of this year as a one-time exception or April 30th every year hereafter. So if you're having to file the return now and you haven't sold the property already if you didn't sell it in 2022, you're going to have to file at least one more UHT return, and that'll be due April 30th of 2024. So just about 6 months from now. Now you have a couple ways of getting this to the CRA. Option 1 is you can mail it. So if you've printed out the form to paper, you can mail it to the CRA. You can find information on where to mail it on the CRA website, and I'll also put some information in the notes on this posting. My only caution with that is the penalties for missing this filing are punitively high. As I think I mentioned before, it's a $5,000 plus penalty for each filing that's missed. So that's not something I would want to chance with Canada Post. Nothing against Canada Post, but they're not perfect and they lose things from time to time. So I would suggest, personally, if this was me, that you consider one of the electronic options, because I would not want to put my entire $5,000 plus fate in the hands of Canada Post. But if you want to, you can do that and just hope for the best. If you want to make doubly sure, you could try sending it by registered mail. And if for whatever reason the CRA doesn't get it, at least you have some kind of proof that you did mail it on time, and maybe they'll give you a break. Again, I'm going to suggest because it's instant and because you have a digital record that you can prove, and because they give you an immediate confirmation number, that you go ahead and do this digitally. So what are your options to do it digitally? Well, again, the CRA claims on their website you can take a PDF, like a scanned copy of the completed form, and upload it to them through your My Account portal. However, they cannot yet actually explain how you do that. I spoke to 2 different CRA agents this morning who also could not explain and have told me that that's an error on the CRA's website. You cannot actually upload a completed PDF. So hopefully they correct that on their website or enable the feature, because I think it's going to confuse a lot of people. So how do you do this exactly? Well, the easiest way is going to be taking the information that you filled out on the paper and re-entering it manually into the digital form on the CRA website. So there's a couple ways that you can do this. Option 1 is, like I said, you can log into your My Account portal with the CRA. The website link on that will also be in the notes on this post. I would highly recommend you all have a My Account anyways, even if you don't have to file the UHT return. It will be where you can change tax information, you can change kids under your care, you can update your address, direct deposit information, access your notice of assessments. You're going to want access to that My Account portal anyways. But if you already have one, that's also the easiest way to file this UHT return. So again, if you're logged into your My Account portal, you're going to click on the link that says Tax Returns. And then if you scroll down a little bit to the right bottom side, you're going to see a new section called Underused Housing Tax. And that's where you're going to go ahead and go through the digital form, retyping in the information you wrote on the paper version. That's going to be the easiest way. When you finish that, you'll hit submit. You'll get a confirmation number that I would print to a paper and or PDF and keep that safe and handy, just in case the CRA claims you didn't file or didn't file on time. Again, that's a $5,000 penalty that would be nice to avoid. That would be a very viable confirmation number, I'd say. The other way you can do this if you want is you can go to CRA's business registration online, or the BRO. So if you just go to Google search and type CRA business registrations online, you will get access to create a new business account. One of the options will be to create one for a underused housing tax account. So that's another way you can do that. I would suggest that's probably going to be only more practical or easier for any clients or anyone out there that has a corporation. And the reason you're filing UH turn is because you have a corporation that owns residential property. And in those cases, you'll already have a My Business Account portal with the CRA, and therefore you'll already have a business number with the CRA, and therefore it'll be much easier for you to just add the Underused Housing Tax Program to your existing account. Otherwise, I'm going to suggest again the My Account is the easiest. Now, one other thing to note that I think is really important that I'm probably going to confuse people, so I'm going to mention it very clearly now. If you have to file a UHT return, particularly if it's because you jointly own a residential rental property with another person, both owners or all owners have to file a UHT return. One return does not cover all the owners together. So if it's you and your significant other, there's 2 UHT returns that need to be filed for that property. If you guys own more than one property, that's 2 returns for each of you per property. So it's per person, per property that you have to file these UHT returns for. So if you own more than one, you got to file it for each property. And if there's more than one owner or multiple owners, each owner has to also file their own. So make sure you keep that in mind as well. Now, one of the most common questions I've been asked in this UHT scenario, again, because it's been written extra confusing just for fun, I think, is if you find yourself in a situation where you have to file a UHT return because you jointly own a property with someone else that's a rental, do you also have to file a return for the principal residence that you live in? The answer is no. The UHT return only has to be filed for each property that is qualified as the rental, that is the partnership. Your principal residence, the house you actually primarily live in, is not considered part of the UHT, and so you do not have to file a return for that property. Also, you don't have to know or include information about that property. It's just the rentals. So hopefully that helps. I realize this video has been about 30 minutes. That's just sort of an indication of how fun and complicated this UHT tax and related return is. Feel free to rewatch this, share it with your friends if you'd like. Make sure that anybody you know that owns a rental property is aware of their filing obligations. Again, it's a $5,000 penalty for being late, and that's not going to be something that I would want to pay. You might have pushback. The CRA might not actually enforce that, but on the off chance they do, that's not a chance I'd want to take. We're happy to help you fill out the UHT form. I feel like we've got a pretty good understanding of it and can help you with it. So if you want our assistance, we'd be happy to help you and we can discuss that further. Thank you very much for watching. Hope you guys have a great day. Bye.